I love when my friend Marcus Warren is on the show because he really gives good information about your retirement, things you need to know to be proactive and things you shouldn't do as well. And that's what we're focusing on today. Marcus, welcome back to the show. Mr. Warren, how are you?
Doing well, thank you.
We were talking about off topic here, folks, but man, you're pumped up about the NFL season, aren't you?
Yeah, starts tomorrow, and yeah, I'm excited.
Someone like you who deals with numbers, I bet you're pretty analytical. You probably look at, break down the game and you do it yardage and all. So yeah, you do, don't you?
Come on. I mean, in order to, as far as me, in order to enjoy the game, take it to a new level, I got to look at the numbers, down and distance, plus minus, all that good stuff.
I know you're that. I know you're that guy. That's kind of cool, though. I'd like to watch a game with you because you could explain. Okay, let's talk a little bit about, speaking of, for you to enjoy your retirement, you need to know the numbers and what you need to do and not do, and that's where Marcus' expertise comes in. Marcus, you're not only someone who helps with wealth management, but you understand taxes. They're all the different layers. You're a one-stop shop.
Yeah, so at Warren Wealth Management, what we do the basic advisory stuff, investment management, asset allocation. But what sets us apart and what adds value to clients is the fact that we also are experts in taxes. So from a standpoint of being able to know that most people have their money in these tax-deferred accounts, us able to set out good strategies for clients, that's what sets us apart. Yeah,
it does. It does set you apart. All right, let's talk a little bit about today's topic, which is 5 things that can ruin your retirement, things to not do because it will ruin your retirement. Right. So we're going to take them one at a time. Okay. Marcus, it's all yours. Here we go.
So the first thing is you have to make sure that you don't go into debt in retirement. So unfortunately, a lot of retirees are starting to go into retirement with too much consumer debt. That's bad for a couple of reasons. One is it takes away from the money that you can spend on healthcare, travel, grandkids, whatever that may be. That's number one. Number two is a lot of times it causes you to spend down debt, not spend down debt, but spend down your retirement funds on that debt a lot quicker. And so what retirees need to try to do is try to minimize that debt, try to pay off as much, especially consumer debt, that you have before you go into retirement.
Okay, this sounds basic, but it's really not, and we'll hear from the expert here. Not investing wisely, you say, is number 2.
Yeah, that's number 2. So not investing wisely. What does that mean? Basically, when you don't invest wisely, you're generally using emotion, and 2 emotions drive the market. We're talking about fear and we're talking about greed. And what those 2 emotions do, John, is it causes you to do the wrong thing at the wrong time all the time. And so that's
sounds like me.
Right. And that's what investors do. What they also do is they do what's called hindsight investing. So what do I mean by that? So if you go back to March of 2020, right, March of 2020, the market dropped 30% in 16 days. During that time, people panicked, wanted to get out of the market. What happened at the end of 2020 is the market actually was up about 17%. But during that time, when the market was down, people wanted to get out. When the market was up, people were like, why wasn't I in? And you can't do that hindsight investing. You cannot invest through the rearview mirror. You have to be prudent and smart and know that, you know what, I have to have a plan. I have to make sure that I invest wisely. I have a diversified portfolio so I can be successful in retirement.
Okay, number 3 here is interesting to me. You say if you fail to adjust your risk level. Now I would think risk level is very specific to one person. How do you adjust, and why should you adjust a risk level?
Well, it's like this. So when you first start off and when you're first investing, you can generally tend to be a lot more risky with your investments, meaning that you can have a good portion of those in the stock market, because if the stock market drops like it has this year, you have time to recover. But as you get closer to retirement, you have to make sure that you take that risk off the table.
Because you don't have time to recover.
Because you don't have time to recover. That's very important. And so what most people do is when they get that first job, they have that 401k, they basically set it and forget it. And initially, they're a lot more aggressive, but they don't change anything. And so as they get closer to retirement, they realize that they have way too much risk in their portfolio. And you have to make sure that you ratchet down that risk as you get closer to retirement.
Okay, something else that you mentioned, and tell us why this is important, is you have to factor in health care. Okay, so not only the cost of health care, but the rising cost, right?
Yes. So
see, I'm listening to you, Marcus. I'm listening.
That's good. That's good. You pay attention. You pay attention. All right. So take this statistic real quick. So a married couple, 65 years of age. They are expected to spend about $295,000 throughout the course of their retirement on health care alone. That's just health care.
Wait a minute. Do that again for me.
Married couple,
right?
65 years and older, are expected to spend about $295,000 on health care alone throughout their retirement.
Woo.
Yes, and
that's a big number.
And that's with Medicare. Most people don't take that into consideration, and if you don't, you're at risk of not having enough money to take you throughout retirement.
Whoa, so that's something, part of the strategies, okay, so all of these little components that we're talking about today are part of your strategy to make sure that people have the retirement that they want, and,
yes.
and if they have questions like, am I ready, you can break it down for them a little bit.
Yeah, and so, that's another spot that we add value, is that instead of just worrying about investment management, when you make that transition into retirement, there are so much more things that come to the forefront besides just your investments. Medicare, Social Security, taxes, so many things all come to the forefront once you retire, and most people don't take those things into account.
And you mentioned, finally, let's talk about this one, because it is so important, and it's something until I started having conversations with you, I did not realize. Think about taxes.
Yes.
Because those are, like you said, if you have tax deferred accounts, Uncle Sam's going to get his eventually, and you're going to pay the cost for that.
Yes,
right?
Uncle Sam is going to get his. And as a matter of fact, this recent bill that came out, the Inflation Reduction Act, is going to arm Uncle Sam with 87,000 more IRS agents. And so most people have their savings in these tax-deferred buckets, 401ks, IRAs. They haven't been taxed yet. When are they taxed? They're taxed when you pull that money out. So as you pull that money out, Uncle Sam is going to have his hand out, and he wants his piece of the pie, right? And so what you have to do before retirement, even throughout retirement, is to make sure you have some sort of tax strategy, some sort of tax plan as you go into retirement, because we always say you don't have a comprehensive retirement plan if you don't have a tax strategy in place.
And literally, these strategies can save you thousands of dollars.
Absolutely.
Especially with the tax, like you said, that being prepared and proactive, and you can help with that. You can call Marcus today. In fact, let's talk about a 15-minute conversation, Marcus, how that works, what kind of information will you need? So
15-minute phone call, we don't need any information, right? We're going to be over the phone. All we want to do is find out where you are, where you want to be, and then we'll see if we're a good fit and see if we can get you there. That's basically it. Now, after that, if we feel that we're a good fit, then we'll bring you into the office. That's when you should bring statements, things of that nature, anything that you want to go over, and then we can help you from there.
Can we talk a little bit about LaunchPad and why you're very passionate about this?
Yeah, because generally speaking, we are a retirement planning firm, so we generally deal with people who are near or in retirement and have $250,000 to $500,000 of investable assets. But we decided to change that because, like I said the last time that we spoke, I am a man of the people, John. I like to be a man of the people. So we've introduced LaunchPad, which basically is for investors who are starting out, mid-career. They can go on. It's an online platform. They can open up an IRA, a regular brokerage account online. They have access to good funds, but most importantly, our advice. So you're able to get access to me, our team of advisors, tax professionals to help you along whatever path you're going down.
Wow. Yeah, I love listening to your expertise. You talk about, you've got more letters behind your name than I can possibly list here.
Alphabet soup. Yeah.
It's pretty impressive here. So let's talk a little bit about your platform or your podcast, Spotify, Apple, wherever you find podcasts,
yes,
right?
Wherever you like to listen. Absolutely. Good information. We try to be, what I call it infotainment, where it's good information. We try to be as entertaining as possible, digestible. We break it down. Because a lot of times, if you turn on the CNBC, a Fox Business, they're using all that
jargon,
financial babble. We break it down. Common language, people understand it, and they appreciate that.
Okay, and then for those who have seen Marcus on the show, and if you're like myself, you're impressed with his wealth of knowledge, and you want to meet with him one-on-one, that's possible as well. If you say, look, I know what he's looking for, I know what I'm looking for, they can just give you a call, set up an appointment, right? They can find your appointment actually you can find your schedule online, right?
Yeah, if you go to talktomarcus.com, my schedule pops up. You can set up a time to meet. Of course, there it is on the screen, talktomarcus.com. My calendar comes up, and we can sit down and chit chat.
All right, chit chat. I like that. Marcus, always enjoy it. And you are pulling for, if I remember correctly, the Cowboys.
Dallas Cowboys. Let's go.
All right, let's go. I'm Ravens, man. Lamar Jackson.
Yeah.
This will be fun.
He needs to get that contract worked out.
Yeah, they do. They better get that
Once
worked out.
he does, Lamar Jackson, give me a call. We can help out.
There you go. There you go. Hey, Lamar, you need help in retirement. I know you're going to be struggling. My goodness. Yeah. All right, let's take a little break here. And then coming up here, what is